Hello guys, welcome to another training video with Forex Trading Signal. So today guys, we're gonna go to speak about the reversal buttons of the chart. So we're gonna go to discuss the reversal button, all of them, head and shoulders, raising wedges, double bottom, double top, and the triple top, triple bottom, and so on. So stay with us, please. We will start in a moment. So first of all, guys, we have already discussed the continuation buttons, and we know now what does continuation buttons mean. So we have discussed the flag, we have discussed the pennant button, the falling wedge, and all those buttons. So basically we have said except the flag, everything else is triangular, because if I considered the resistance line and the support lines, and if these shapes make for me triangular, means the button, we can call the button triangulars. So resistance line and the support line making for me triangular. So that is why I am calling this shape triangular. So this is pennant. However, let's say the raising wedge, resistance line and support line, and those are making triangulars, and this is a different button than this. However, I call them all triangular regardless of the naming, because I don't want you to be confused with the name, so you remember that. So now the same things applies when it comes to the reversal button. Those are the reversal button. In the continuation buttons, how it works, the trend either going up or down. Then if it's going up, you have movement uptrend. Then you have a consolidation or button. Then you have button. Then it is breaking and continuing up. That is why we name these continuation buttons. So start from here, going up, then making the button, then breaking and going up. That's why we call this button continuation button. Similarly here, it's starting from down, going up, forming the button, then continuation, breakout and continuation. If it's bearish, this is bullish. If it's bearish, it's breaking from this area. It's starting from the top, continuing down, then button, then it is breaking here and continuing down. That's why we named those continuation button. Unlike the reversal button. Reversal button are other way around. So if the trend goes up, the continuation button, then breakdown. Again, I don't want to confuse you with the naming. So the reversal button, how it works? You have a trend, for example, going up, then you have the button, then a breakout here, then a reversal. So previously, when we have discussed the continuation button, it was either trend going up or down, then continuation, then a breakout, then continuation, uptrend, or coming from top, continuation button, breaking and going down. So continuation button. Here, the story is different, because you are coming from bottom, going up, making the button, then you are breaking, then you are reversing the trend. That's why we call it reversal button. So here, similarly, coming from top, going down, making the button, then breaking this area, and you are reversing. So all of those buttons are acting as a reversal button. So I don't want you to get confused with this. So that's why I want you to remember from the reversal button only the three things. Later on, we'll discuss them. From the reversal buttons, I want you just to remember three things. When we have double top, double bottom, triple top, triple bottom, those are considered consolidation buttons. We call them consolidation buttons. I will speak about them later on. Why? Because the movement of the button or the formation of the button is sideways. It's not going up. It is not going down. It's not going in any direction. So it moves sideways. So that's why we call them consolidation buttons. So the triple top, the double top, or the triple bottom, the double bottom. Then head and shoulders, we have head and shoulders, then the triangulars. We will speak about them in details in a moment. So oversold, overbought, was the three market stages. So we have explained these guys before, and we have said that the market moves in three stages. Stage one, then it will break out stage one here, stage one, then it will break out stage one, and it will make continuation button, then it will move another continuation button, then it will move, then here now it will make another continuation button, and it will enter stage three. So we said this is stage two, and this is stage three. So guys, if you did not see this video before, we have explained about the market stages. Please go and watch that video, it's important. So stage one, stage two, stage three. So if I was in downtrend and I was in stage one and I have started to see pattern here and the breakout, that means this button is reversal button, not a continuation button. However, if I am in stage two and I have started to see button here, then that is a continuation button, not a reversal button. So in order to know if the button is continuation or reversal, because most of the buttons are triangular button, right? So you could confuse whether it is reversal or continuation button. Here it's a small technique to know. So if it's in stage two, that means it's a continuation button. If it's in stage one or three, that means it is a reversal button. So here you can see triple top, price came up, started to consolidate, then break here, then down, then this is stage two here, then this is continuation button, and this is continuation button, and now you are in stage one here. This is will be reversal button because you will be having price going down, forming these, and you will be breaking here and continuing up. So the market does move in three stages, guys. You have to see this video and understand it properly. We have spoken about it in details, the market stages, and we have spoken how to make a trade on it. So the market stage is very important. So normally the other things I want you to know that when the market stage start to form, you need to understand that reversal patterns comes only after oversold or overbought. So what does it mean? If you look here to this market stage, you will see that the price moved to reach that reversal button here, market stage 3. To reach that level, it has moved a lot. So the movement is big. So when you see movement is big, and when you see the formation of several continuation button, minimum 3 or 2, has been formed before, like you have a trend going up, then you have continuation button, then up, then continuation button, then up, then started to see now formation of continuation button again, but it's not going up too much. Then you have started to see head and shoulder, or you have started to see triple bottom whatever, or triple top whatever. Then you will understand that already you have 1, 2, 3 continuation buttons. Then this stage 2 has finished because you have already 1, 2, 3 continuation button. So whatever you're gonna go to see here, you're gonna go to see reversal button. So reversal button can be triple top, double top, can be head and shoulder. If the trend is going down, you're gonna go to see triple bottom, double bottom, inverted head and shoulders, and of course the triangulars. So I hope that you have understood this. So the movement, the big movement from here to here, we call it overbought. Means that people, they have bought the asset too much. So the buyer exhausted. When it's moving down, we call it oversold. So you need to make sure if you are going to reverse, to enter trade where it's reversing the trend and you think it's reversing, first condition, you need to make sure whether the price is oversold or overbought. In the gold, it's $10 to $25 to complete the market stages. However, there are a specific condition, like very rare condition, where the gold will move more than $25 and will move $60 and $70. So in that time, you will see that big movement is happening. So you need to wait until you see a formation of reversal button. Because if you see big movement, what is going to happen first? The thing that going to happen first, continuation button first time, then continuation button second time, then continuation button third time, then after 3 times or 2 times continuation button, you will see the reversal button. So don't get trapped into this. So we'll move next. Now the first thing we're gonna go to discuss the head and shoulders. I'm going to discuss these now in details, but it's little simple. We will not consume too much time on it. So the head and shoulders, guys, this is a bearish head and shoulder because it was coming from bottom, going up. And we said that this is supposed to be now overbought. The price is moving up too much. Then I have a left shoulder, then I have the head, and that head is a resistance above the left shoulder, then going down, and here is the right shoulder. Then I am having 2 supports, and those 2 supports, I can put line on them, and that line is called the neckline. So this is, guys, the bearish head and shoulder because it is coming after uptrend. So if the trend is up and I have reversal button head and shoulder and it's breaking down, that means it's bearish. So regardless of the name, bearish or bullish, you just remember head and shoulders and see whether it's after buy or sell, and it has to be or either after overbuy or oversell. Next one is the inverted head and shoulders. So head and shoulders can be from the top or can be from the bottom. So price is coming up, head and shoulder, price is coming down, head and shoulder again. Let's discuss it in detail. So let's discuss the bullish head and shoulders in detail. So price coming down, then started to see first resistance. So this is the first resistance. Then this is here support, and we call this the left shoulder. Then price started to move down, so it has made lower support, lower support here. Then it has caused or made the head. Then it has bounced back and it has made another resistance. So now I have 2 resistance, 1, 2. However, when I have made support number 1 and support number 2, here support number 2 was lower than support number 1. That's why these become shoulder, left hand. Then this is head. Then after that, it has made another support, which is higher than this. That means this is the right hand shoulder. So now I can put neckline on these 2 resistance. We call this the neckline. And the moment I see breakout here, that means the button is active and I can enter here. There are people, they will enter here immediately after breakout and close, and there are people, they will wait until other retracement, and they will make sure that this is becoming support, resistance becoming support, and they will buy from here and they will continue with this. For me, I am entering from here after breaking out this. So this is basically the head and shoulders, guys. Okay, so it's simple. It's not that much complicated. So what you need to know about the head and shoulder, two things. You need to make sure that the price, when you have head and shoulder, you need to make sure that the price is after oversold or overbought. If it's reversing from the top, you need to have too much extension. Price moved up too much. If it's having from the bottom, you need to make sure price moving down too much. That's one. Second thing, you need to know the shape of the head and shoulders. We call it head and shoulders because it's having left shoulder and right shoulder, and the head is lower than both. And we have the neckline here. So the triggering point for us when we draw the neckline, if a breakout happen to the neckline and close above it, then that is our entry. Normally the target will be the distance between the face shoulder, the right shoulder, to the support, to the neckline, and we take that distance and we measure it here and we put our target here. As per our strategy, normally we do these 3 take profit. So I hope that you have understood the head and shoulders. I will not speak about it more in details because we will practice this in the chat practically. And we will do this also during the signal. I will explain any entry and what is the button we are trading, so you can learn this practically. Double bottom, double top button. And here also I would like to include the triple bottom and triple top because it's identical the same. So double top and double bottom. So again, the first condition for these buttons, it has to be like oversold or overbought. But here there is no head. It is only 2 resistance and 1 support, or 2 supports, 1 resistance if it is inverted 1. So this is very simple. We consider this movement is a consolidation because it's moving sideways. It is not trending up like this. So we consider this consolidation. So this is again neckline. And the moment I see break for the neckline, I will go down, or break on the neckline, I will go up. So let's discuss it in detail. So again, guys, let's say the price is coming down. I want to make sure that the price is oversold. This is a bullish double bottom. So don't worry about the name of these, but however, I want you to know that if the price is coming down or going up, in this case is coming down because it's double bottom. If the price is coming down and started to see the face support here, we call this bottom number 1. Then price has came up and hit resistance here, and we call this now resistance. So you have seen from that resistance, price came down again and it has made another bottom, then the price started to come up. So guys, the moment I see double bottom in the same area, same support level here, and I can see here resistance, I'm going to put horizontal line on that resistance level, and the moment I see a breakout for that resistance level, breakout and close above it, I will go buy from here. Similarly, if it is other way around, if it's inverted one, so I will be doing the same thing. So simply to simplify these, guys, and this is applicable also for the triple bottom, to simplify these, this is a W shape. This is a W shape. W shape. The moment I see double bottom, double supports, and 1 resistance, that resistance, if it's breaking, then I will be going by. So this is, guys, applicable also to the triple bottom. So if it's a triple bottom, you will have support 1, then resistance, then support 2, then resistance, then support 3, then resistance. Then you will be having 2 resistance, 3 supports, and we call this triple support, and you will have break up. Similarly, guys, if it's other way around, so resistance, support, resistance, support, resistance, then you have breakout, then going down. So this is triple top, triple bottom. So I hope that you have understood this. So let's move to another one. Now we're gonna go to speak about the triangulars. Triangulars, guys, I'm going to discuss only the raising wedges and falling wedges because all the triangulars are the same. So don't worry about the name. If the line on the resistance and the line on the supports forming triangular, call those buttons triangulars, okay, regardless. The only condition you need to know that a reversal button, you will know that it is a reversal button if you understand the market stages and you understand the concept of the oversold overbuy. Because reversal buttons, it's coming after a big movement, whether it's down or up. Continuation button, it's the start of the stage 1 and the stage 3. It's the starting of the trend. So reversal button, raising wedge. So normally, if I take this button, the bearish one, so normally the price goes up, it's overbought, started to see phase resistance coming down, support, then coming up, failing to make high resistance. That means your momentum started to be lost here, then another support, then third resistance, then breakout and reverse. So this is, guys, 3 resistance, 3 supports, and again, what is the shape of this? It's a triangular, regardless of the name. So this is how it works. So if I look into this resistance, I will see that those resistances very close to each other, and it's coming after too much uptrend or overbought. So guys, if I want to draw these properly and I want to show you how the market is acting. So the price is coming down. And this is, let's say this is stage 3. What you will see first, you will see continuation button, right? Then a breakout for the continuation button here. Then price moving down. Then another continuation button. Then a breakout. Then price is moving down. Then another continuation button, then the price going down. Then now that is the area which we are calling oversold, because the price is already moved all the way down and we have had minimum of 3 or 2 continuation buttons. So after 3 continuation buttons finish, the price is done. Now I am in market stage 1 here. So what I'm expecting to see here, expecting to see reversal button. So regardless of the name of the button, if I am seeing button here and that button started to support, whether it's double bottom or it is head and shoulders like this, or double bottom or triple bottom, so that is a reversal button. So the moment I break the resistance line here, then I'm expecting the price to go up. So that's why we say overbought, oversold. So hope that you have understood these, guys. So now you see the triangulars here, it says uptrend, wedge, raising wedge, falling wedge, raising wedge, falling wedge, regardless of the direction. So I'm putting these guys in front of you because I don't want you to be confused with the name. Please don't concentrate on the name of the buttons. You concentrate in the triangulars. You concentrate that the resistance line and the support line is shaping for you triangular like this. So we call them all triangulars. So you don't need to worry whether it's bearish or bullish or whatever. What you need to remember, first condition, market stages, you need to know them, and overbought, oversold. On the gold, on our strategy, we make those oversold, overbought from $10 to $25. However, there are cases where the price will move $45 and $60 one shot. So the other condition, when you see market stages, you need to see, if you want to predict a reversal button, you need to see first 2 or 3 continuation button. You need to count them in the chart. If there is a 3 or 2 continuation button in the chart, then that is the time, if there is another button, you can expect to see reversal button. Please keep it in mind. I will repeat this again and again. So now the most important things about the button. The most important things about the button, that is the one. This is important slide. So now, continuation button, what are those buttons? Those buttons is the buttons which is, we see them when the trend start to happen, start to begin, and you will have minimum 2 or 3 continuation button, and those buttons will be on market stage 2. So we call them continuation button because it's continuing the trend. So it's button to continue the trend, because the price, it doesn't move in one direction one way, so it has to rest and it has to start again, rest and to start again, rest and to start again. So if I have movement up, resting, then movement up again, then resting, then movement up again. And we have discussed also the reversal button. Those are the reversal button, regardless of the naming. So the difference between the reversal button and the continuation button is continuing the trend, reversal button are reversing the trend. So double top, double bottom, head and shoulder, inverted head and shoulder, raising wedge, expanding triangular, it's a triangular regardless, and triple top, triple bottom. So let's discuss the differences between them and what is important in each type. So first, if you look into the continuation button and the reversal button in the red boxes, you will see the following. You will see that all the buttons in the red boxes are similar in the concept. This is very nice. You have 10 buttons. You don't need to think about them. They are all same in concept. They are all triangulars. They are all triangulars. So look at them, guys. They are all triangulars. How I can know whether it's reversal or continuation? I can know from the location of the button. If it's in market stage 2, it's a continuation. If it's not coming after overbought or oversold, it is a continuation. If it's coming from market stage 1 or stage 3 after overbought or oversold, that means it's a reversal button. Simple. That is the first condition. So those triangular are all the same, having 3 resistance and 3 supports. 3 resistance, 3 supports. 3 resistance, 3 supports. 3 resistance, 3 supports. 3 resistance, 3 supports. So those buttons are similar, identical, the same. So all of them, they are triangulars. How you make sure that whether it is continuation or reversal, you need to know the location on the market stages. If you did not see the video of the market stages, is very important. You go back and watch it. It's very important. So second thing, they are coming from major support, major resistance, and they are causing 3 resistance, 3 support after overbought or oversold. Second thing, if it's a continuation pattern here, the condition has to be in the middle of the market stage 2. If it's a reversal pattern, then the condition will be in the location of market stage 1 and 3. So double bottom, double top, triple top. So first thing, they are consolidation. They are not making triangulars. They are rectangulars. Okay, sideways movement, and there is a neckline. So if a break happened to the neckline, then consider an entry for buy or sell. And this is a side movement, and those will come on market stage 1 and market stage 3. So after overbought or oversold. So after that, the head and shoulder pattern. The head and shoulder patterns are spikes, a result of action from big shocks. So these, if a breakout for the neckline happen, then we consider this buy or sell. So those patterns, you can find them in market stage 1 and market stage 3. So guys, in general, those are all the patterns you can see on the chart. However, what I want you to take from this slide, the flag, the pennant, the falling wedge, the raising wedge, the expanding triangular, all those buttons, whether it's a continuation or reversal, all of them, they are triangular. The double bottom, triple bottom, it's a side movement consolidation. The head and shoulder, it is left shoulder, right shoulder, and the head above them or below them. So head and shoulders. That's why we call them head and shoulders. So reversal buttons comes after overbuy or oversold. Continuation button, it's coming after the beginning of stage 2, which is coming after market stage 1 or 3. So now guys, I would like to move to the chart and predict some of the patterns on the chart. So this is the chart, guys. So guys, head and shoulders. So let's discuss head and shoulders. First of all, I will explain 2 or 3 patterns, then we will close this video. Look at this, guys. This price started from this area and it is going up like this. So however, when the price started, we started to see first continuation button, second continuation button, third continuation button. Then we have started to see spike, then support, then shoulder, then support again. So this is here the neckline. So left hand shoulder, right hand shoulder, then the head, 2 supports, neckline, left hand shoulder, head, right hand shoulder, and breakout here in this candle and going down. So let's find another pattern. So price is oversold, consolidated here, hit bottom number 1, bottom number 2, then gone and break here and start to move up. So this is double bottom, we can call it, or we can call it also triple bottom, because this is 1, this is 2, this is 3. So if I go drill down how to make entry here, I need to go and drill down to see lower time frame. So this is another nice head and shoulders, and you see how the price is retesting again and going up. This is another head and shoulders. If you want to see reversal pattern, so this is a reversal pattern because it's coming after 1, 2, 3 continuation. It is overbought. So this is a reversal pattern. And how we understood this is a reversal pattern, we drawn triangular here. So this is basically having head and shoulders here, and it's having reversal pattern. So I have a breakout here and it's moving down. So you see here, it's a continuation pattern because this is market stage 3 here, and we just broken. So we have a continuation pattern here, 1, continuation pattern here, 2, it's moving down, then started to reverse from here. So this is here double bottom because it's on the same level. Double top, double bottom, it doesn't mean that it has to be exactly the same point. However, it has to be close to it, and it has to have the neckline here. Later on, guys, we're gonna go to discuss the cleanness of the chart. So breakout here and coming up. So let's discuss continuation pattern. If you look into this area, this is market stage 1. This is continuation pattern number 1, 2, 3, right? So let's see this one, how it looked like. You can see here, price is going up, just started from stage market 2, and it's going up, second continuation pattern, then it has gone up again, continuation pattern, then started to form shape here. So if I go to this now, guys, here to this area, I will find here a reversal pattern if I drill down to lower time frame. So guys, when you have a reversal or continuation pattern, you need to drill down to the other time frame and you need to understand the conditions. So that's it, guys. We can practice this on daily basis on the chart whenever we are giving you signal. So we tell you what is the condition of the market, and we tell you how we are trading this, and we can practice this together. If you have any question, anything you want to ask, please ask, don't hesitate, and we will answer you. Now guys, I hope that you have enjoyed this video and I hope that you have learned from it. We will continue practicing in our channel all the patterns. However, next time we're gonna go to make video on the candlestick and we will explain them in detail. So you will be covering all the aspects of the technical analysis. Then after that, we will move into the fundamental analysis. So thank you very much and see you next training video.